Hey there, welcome to today's video. Let me jump right in there. Alright, let's get started.
You all know about Tesla, right? Well, you should with the rockets and the attempts at Mars and the electric cars. In that case, you should be well acquainted with Nio then. The Chinese automobile manufacturing industry that is giving Tesla a run for its money is located in Shanghai and is solely focused on the development of electric vehicles. The Nio company designs, manufactures, and sells smart and connected premium electric vehicles with its next-generation technologies in connectivity, autonomous driving, and artificial intelligence. Before we go any further, why don't you hit that like and the subscribe buttons? Hitting the bell icon is the best decision you're going to make today. I promise you, it's going to be worth it. Roughly 2 months ago, the two household names when it comes to electric vehicles, or EV, Nio and Tesla, took a bad hit to their stocks. This dip can be attributed to the broader market sell-off and the shifts away from growth stocks. This does not mean the stock is undervalued, quite the opposite really, as some believe it will reach $100. The constant mentions of Nio in the news leave many investors jittery and wondering if they should indeed purchase more stocks or ignore Nio from the time being. When the company that many term the Tesla of China announced on the 26th of March a semiconductor shortage and suspended production for 5 working days at the manufacturing unit in Hefei, many panicked, which also had a hand in the recent decline the stock is experiencing. Unlike what many might think, however, this will not result in any damage to the company, as Nio is here to stay and would continue to grow rapidly, remaining a stiff competition to the other electric vehicle makers. While the company is experiencing a temporary dip, the strong financials of the company affords it a positive future. Another addition in the plus column is the fact that the electric vehicle market in China is huge, with even bigger growth potential. The vehicle sales rise with every quarter. Despite the pandemic, which crippled a lot of businesses and dealt a severe blow to others, Nio still managed to deliver 17,353 vehicles in its fourth quarter, setting a new quarterly delivery record. To round out the last year, Nio, on the 17th of November, reported above consensus third quarter results, finishing the year strong despite the many adversity. The semiconductor shortage notwithstanding, the Nio company still believes they can produce 19,500 vehicles within the first quarter. Is that determination or foolish hoping? I guess we'll find out. Notwithstanding, the figure is an impressive one, which will show a significant improvement in their deliveries when compared with the previous year. The confidence that Nio projects in meeting up with the demands and their estimated production rate looks good for their stocks. The Nio company has been making moves to expand outside of its U.S. exchange. This news is rather pleasing to many of the Nio investors. The Nio company has filed regulatory applications for a listing on the Hong Kong Stock Exchange. The company also intends to offer 5% of its expanded share capital, which is without a doubt a good move, but by the intended listing, the company will be able to expand its investor base. The intended listing will also allow the company access to extra capital and reduce the risks that are associated with regulatory restrictions on Chinese companies listed by the United States. You can never go wrong with a little extra capital, can you? With this move, Nio is definitely making moves in the right direction to gain a higher market share. Another smart move made by the Nio company is the agreement it signed with Metro to work towards building charging stations. With Metro's 97 shopping malls in China, Nio has nabbed the popular location options to swap batteries and have a charging station. This will no doubt be considered by the potential customers who will pick Nio. This will increase their market share and increase the revenue growth. This will eventually reflect in Nio's shares. In the last year, about 1.3 million electric vehicles were sold in China alone, and a Canalys report estimates that the sales of electric vehicles will increase by at least 50% this year. This means that at least 1.9 million electric vehicles might be sold this year. This figure shows great promise for Nio, such promise that the current dip seems to be nothing to worry about. With the company's strong hold on the exponentially growing industry, it seems that Nio is here to stay. A number of positive catalysts that are sure to drive up the price of the Nio stocks are Apple's alleged entry into the electric vehicle industry and the increased stock price of Tesla months ago back in January 8th. Tesla's prospect of market capitalization of topping $1 trillion without earning much profit is great news for Nio. Unlike its rival in the game with a market capitalization of $806 billion, Nio trades at 1/8 of the market capitalization of about $95 billion. It is believed that China desires a homegrown electric vehicle player to dominate the Chinese market. This might have been as a result of the cat and mouse game China and the United States are playing with each other. one trying to one-up the other. Whatever the reason, China really does not want Tesla to become the dominant player in their territory. While Tesla had the first mover advantage, Nio is catching up speedily and building for them a loyal customer base. Many customers believe Nio to be a high-quality and premium brand with the world's best when it comes to technology and service. Building on that, the Nio brand has managed to obtain an impressive 62% referral rate and rank high in favorability in a study conducted against major brands. The more the Chinese learn about Nio, the more they dedicate their loyalty to the brand. This may be as a result of the material share that Nio distributes to its prospective clients, teaching them about value proposition and the quality of its products and services. That the average Chinese would much rather prefer the local brand is also a mark in Nio's favor. The battery swap technology has also endeared Nio into the heart of its customers. Nio buyers are also eligible for subsidies from the Chinese government, an avenue that is not available for Tesla. The subsidy to purchase electric vehicles under 300,000 yuan is only applicable to manufacturers that make use of the swappable batteries. Unfortunately, Tesla does not allow its batteries to be swapped, which is well encouraged in China. Nio, on the other hand, have perfected the art of battery swap technology for its vehicles and deployed 143 battery swap stations across 64 cities in China and completed over 800,000 battery swaps for its customers. In August, Nio commenced a Battery as a Service, or BaaS, subscription model. This BaaS model allows its customers to buy electric vehicles and subscribe to the usage of battery packs separately. Should the users opt for an ES8, ES6, or EC6 model and subscribe to use the 70 kilowatt-hour battery pack under the BaaS model, they can enjoy the vehicle purchase price with an RMB 70,000 deduction off the original price and pay a monthly subscription fee of RMB 900 for the battery pack. Will Nio hit the $100 mark? About 76.5% of traders and investors of Benzinga believe that Nio would indeed reach $100 per share, although some say this might not happen until 2022. They believe that once Nio branches out and starts selling to Europe and the United States, the Nio stocks could very well be over $200. Back in February, the Nio stocks reached an all-time high of $62.84. This great increase made many predict that the stocks will hit the $100 mark sooner rather than later, but as the prices have dropped drastically, the $100 per stock goal seems a lot further out of reach than before. It is worthy of note that while there has been a drop in the stock prices, the company's fundamentals have not deteriorated in any way. As it often happens in macroeconomic environments, a great deal of the negatives like the global chip shortage will play out for a little while longer. As the investors have generally shifted away from growth stocks, there has been a great deal of pressure on these stocks, Nio included. However, as the future of mobility is still electric, China is set to lead the revolution with Nio in the right place and at the right time. The support of the Chinese government on the homegrown electric vehicle market players, including Nio, is a huge benefit for them. As Nio is now synonymous with quality, the company moving forward is now focused on quality and execution. With the expectation and beliefs by many that Nio might break into the European market, it is definite that the Nio stock will reach and even break past the $100 mark. Nio manufactured about 4,000 to 5,000 vehicles a month, leading to about 48,000 to 60,000 cars last year. The company's CEO, William Li, has however assured that the company should be able to manufacture about 150,000 per year. Should reality match expectation, the $100 mark is highly feasible. Could Nio become a million maker stock? To become a million maker stock, the market capitalization of a company has to start from a low and build itself up. For instance, last year, April, the Nio stock was trading at a low price of $2.94 per share with a market capitalization of almost $3 billion. The market capitalization has since then bloomed into almost $100 billion in February 2021. Into the early days of April, the market capitalization stands at $63.4 billion. This means the stock offered well over 11 times return last year. There are definitely handsome returns to have by holding on to Nio stocks, but its runway to provide returns in the multiple of 10 times is probably limited now. In spite of that, you should do well to remember that Nio operates in a growing industry. That, coupled with Nio's expansion opportunities, could very well provide investors with returns of over 3 to 4 times the multiple of the current market price in the long term. If this does not make you a millionaire, it would be by a very little margin.